Next one up here. Apple slump is a buying opportunity. Dan Ives.
Ives, Dan, what happened to Apple today? What's happening to Apple?
Look, it's been a white knuckle period because of China. I mean, as we know, China, that's 20% of iPhone demand. And we're here in Asia. I mean, we've definitely seen softness around China and in and around in terms of discounts coming out of the near. And look, in my opinion, this is a near-term turbulence period. But on the other side, you have a massive pent-up demand in terms of the upgrade cycle, 270 million iPhones. You have AI finally coming to Cupertino. We view this as a buying opportunity. Been here before, but clearly it's some dark days that they're getting through in terms of China.
Despite the fact that most Apple products are made by Foxconn in China.
The scariest thing about this Apple move and how much trouble this stock has had here at the beginning of the year, the scariest part of this is why the Qs have been pumping. The NASDAQ's been pumping. Tech stocks in general have been having a great time. And to see Apple, as weak as that stock has been, despite this market where it is a very good market for tech stocks, scary. Because you do have to think, man, what happens if we get a real NASDAQ pullback at some point this year, whether it's in a month from now or a few months from now or a day from now or 6 months from now? Where's Apple stock in that situation if it's this weak with this current market we have, right? That's what you got to wonder sometimes. And it's like, geez. With that being said, I do think Apple will have very nice growth in 2025. I'm very convinced that Apple will have very good growth in 2025, but not this year. This year, maybe revenues up slightly, down slightly, flattish, something like that. It's going to be tough for any growth in Apple this year, but next year, I think it's going to be actually a pretty sweet double-digit growth year for the company.
The fact that the Chinese government has effectively banned government employees, which is millions of people, from using iPhones for at least their job role, it seems like Apple has a huge target on its back in its second largest market, despite the fact that it must spend hundreds of millions or billions on manufacturing. It all seemes strange.
Yeah, but
they're the second biggest employer in China at peak iPhone cycle. So it comes down to from a supply perspective in terms of how important they are. When it comes to the demand side, look, they do have a bullseye on their back. But we've been here before. We think they get through it. I remember 4 years ago, the same type thing. You have 200 million iPhones installed base in China. This will yet again grow, despite right now. I mean, sentiment, it's a piling on effect. We view this as a buying opportunity. I think a year from now, the stock's materially high.
This is baloney, okay? These guys want to make out like the reason Apple's doing bad in China is because China's like, oh, we're going to just buy non-American iPhones. We don't want to buy Apple. Baloney. The Chinese citizens aren't, listen, I'm brainwashed. I'm going to buy a new iPhone. It doesn't matter what other phone manufacturers come out with. I'm brainwashed. I'm going to buy a new iPhone if I got to get a new iPhone, okay? The Chinese aren't as brainwashed as us when it comes to phones. They're very open. So if somebody comes out with something very innovative, let's say Huawei launches a new phone that's very innovative, they're very open to say, I'm not going to get an Apple iPhone that's the same thing as every freaking year. I'm going to go get the Huawei. The bottom line is Apple has not innovated in several years on iPhone. Several years. Meanwhile, the Android competitors have actually been innovating quite substantially as viewed by the marketplace. And so therefore, Apple's getting beat for sales. You look at Huawei's numbers in China, they're not having trouble moving units. You look at Apple's numbers, they're having a lot of trouble. The good news for Apple is they got a big iPhone coming next year, and that's probably the only way Apple can really innovate nowadays. But the big iPhone will do good numbers next year, and it will do good numbers in China next year as well. But for now, the Chinese consumers like, this iPhone 15 is the same as the 14. Why would I want to get this new one? And they look at the innovations that's happening on the other side, and they're like, this is way better with more attractive price points, and I don't blame them.
I'm going to say a bad word. commodity. And I say that because do you have any worry at all, Dan, that Apple, which, by the way, makes amazing computers, the Vision Pro looks fantastic, Apple TV is cool, but they live and die mostly by the iPhone. Do you worry that the iPhone is being seen or viewed by investors as a commodity type product?
Yeah, Brian, I think it's a great point. But we've seen this before over the years in terms of viewed as a commodity. But there's 2.2 billion reasons it's not a commodity. It's because of that install base. The iOS install, that's the golden install base of Cupertino. That's the reason that we remain firmly bullish on this, because it's about services. That's a big part of the re-rating. And it's the install base. And now AI is coming to Cupertino. I think to sell this stock ahead of that would be, not just the wrong move, maybe historically wrong move relative to where we see this going.
What is Apple's role in AI?
Well, we believe on two fronts. I think they're going to introduce a WWDC in June, the start of an AI app store, which will be a separate app store, AI apps within the ecosystem. That's going to be significant from a services business. And then the big one, the drum roll, they're going to incorporate AI into iPhone 16 from an LLM. And I think when you look at that install base with AI, I view Apple where Meta was 18 months ago, whereas we know the New York City cab driver was bearish on Meta back then.
Yeah, we'll see. We'll see. Next one up here are these safe stocks that has some incredible upside potential here over the next 1 to 3 years is one you might not think about. It's Cheesecake Factory. I expect this stock to over double in the next 1 to 3 years. Yes, indeed. Now you might be thinking, restaurant company, I don't know. Could a company like that really double in such a short amount of time? Because you think about an NVIDIA or you think about, some sort of e-commerce company or companies like that. And it's like, okay, see how they could, scale quickly, some sort of SaaS product, but a restaurant chain? Here's the deal, okay? Let me first take away that false belief of thinking restaurant chains can't double rather quickly. This is a 5-year chart of Texas Roadhouse. The stock has gone up 132% in the past 5 years, with much of that coming really in the last 4 years. This is Chipotle. This is a 5-year chart of Chipotle. Chipotle is up 340% in the past 5 years. This is Wingstop. The most average wings you'll ever get. I'll say that. I've had Wingstop many times, and every time I ever go to Wingstop, I think, dang, this place is average. And man, the stock price is not average. I'll tell you that. 435% gain in the past 5 years on this one. Shake Shack. This is a 1-year chart of Shake Shack. Just in the past 1 year, Shake Shack has gone up 77%. 1 year. So don't, take all limiting beliefs about restaurant chains thinking these stocks can't increase dramatically over a 1, 3, or 5 year span. Take that right out, because factually they can increase rapidly. And I think that's what's going to happen here with Cake. Now, in regards to Cake, the forward P on the stock's about 12. And this is one of the things that gives me conviction in believing that this stock's going to likely double up here in a very short amount of time. If this stock was trading at a 25 forward P, I feel very, very differently about the company. Texas Roadhouse, for instance, trades at a 27 forward P. Chipotle trades at a 50 forward P. Darden Restaurants trades at a 20 forward P. That one's, I guess, a cheap one, which, if I compare Darden to Cake, Cake's going to massively outgrow Darden over the coming years, in my opinion. So just crazy that stock trades that rich compared to Cake. Wingstop trades at a shocking 124 forward PE. And the craziest one of all of them is Shake Shack at a 151 forward P on that stock, okay? So one is Cake just has a lot of valuation catch up to play here as people understand the story better. Now, there's 3 core ways that Cake's going to grow over this next few years. The first way is the traditional Cheesecake Factory restaurants. They still have more location opportunities in North America and international specific. Because Cheesecake Factory is such a famous brand, they're going to be able to expand that more and more with licensed locations internationally, and that's something they're executing on. That's way number one they're going to be growing. Way number 2 is through their FRC concepts, and specifically North Italia and Flower Child. Those are the biggest growth opportunities in the short term for this company. They're talking about as many as 22 new units planned for 2024. So massive unit expansion coming here for Cheesecake Factory over the next several years. Here, they also own other brands, Culinary Dropout, and some other brands. So, bunch of new locations going to be coming down the pipe over the next several years. The third way of growing this business that they're executing on is growing comp store sales, comp restaurant sales. So basically just you're making more money from your restaurants, right? If we look at this past year, fiscal year 2023, 3% comp store sales were up to Cheesecake Factory, North Italia 8%, and then FRC in general was a 3% gain in terms of comp store sales, average weekly sales per restaurant. Okay, so very impressive numbers. So that's three strong ways this company is going to be growing. You put all three of those together, Cheesecake Factory, international opportunity, all the new locations with FRC, and then your restaurant's doing more and more business, that bodes very, very well for you, right? Now, if we look at the kind of longer term outlook here, they're talking about 1% to 2% comp restaurant sales growth, which is not a hard number to hit. I think they'll be able to hit that pretty easily. 7 to 8% top line revenue growth each year. They're talking about 2 to 3% annual unit growth in Cheesecake Factory. 20%-ish type growth in North Italia, which they're going to be able to grow North Italia at a 20% clip for many years to go in the future if they want. And then Flower Child, same exact thing, 15 to 20% unit growth there, much smaller square footage, so they could fit a lot more Flower Childs in locations that you just couldn't fit a Cheesecake Factory in, or even a North Italia for that matter. Fox Restaurant Concepts in general will be able to continue to grow a lot of those brands at a 10 to 15% clip. By the way, they just pulled in Flower Child into the Cheesecake Factory side along with North Italia. Now, next up here, think about this for a moment. And this is something I really realized with Cheesecake Factory that's such an exciting opportunity here. Cheesecake Factory has three for sure big hits in terms of big hit restaurant brands. When I say big hit restaurant brands, meaning like minimum of 100 locations, if not several hundred locations from each brand, because it can be that successful. They obviously have Cheesecake Factory. That's super famous. Everybody already knows about that one, right? North Italia, that's going to scale to several hundred locations. And Flower Child, no doubt in my mind now at this point in time, that will scale to several hundred locations over the next 5+ years. And so they have three legit, proven out massive brands here. Yeah, that you're gonna see in every single big city and many locations in big cities all across the United States of America, and then international. Now, if I think about their competitors, Texas Roadhouse only has one right now. Texas Roadhouse has two other brands, and I own Texas Roadhouse stock, and it's done me tremendously well. But I got to be honest, when it comes to Texas Roadhouse, they own two other brands, and neither one of them I'm convinced is necessarily the next big hits. Bubba's 33, Jaggers, might be, but I'm just not convinced like I am in terms of North Italia and in Flower Child. Chipotle obviously just has Chipotle. That's their one big brand. Darden does have three big hits on big brands behind them. Longhorn Steakhouse, they have Olive Garden, and then they have Yard House, which will probably push close to 100 locations here very shortly. Wingstop only has that, right? And Shake Shack only has that. So if I think about, when we go back to the start of this video, think about safe companies, I think it's pretty safe when I have, a diversified business model overall of ways to grow the business outside of just one brand. Because the problem in the restaurant category, one of your biggest risks is some sort of foodborne illness breakout, something like that. There's something that happened in Chipotle back in the day, and that took Chipotle stock from a $700 stock down to about a $200 stock in a matter of about 12 to 18 month span, because Chipotle had a really bad, let's call it, foodborne illness type situation many years ago. And so that's a risk there. If something like that happens, it goes viral, everybody hears about it, it can hurt a brand very negatively for at least 2 to 3 years. And I don't have that sort of risk with cake because I have three different brands. Imagine something happened at Texas Roadhouse bad. Oh my gosh, that'd be very devastating to that brand overall for at least 2 to 3 years. Now, the acquisition, this company acquired the FRC concepts. They acquired that back at the end of July 2019. Now think about this for a moment. This was, a mere 6 to 7 months before everybody started talking about Rona, right? Which was devastating to the restaurant category in general. And so a lot of people never really got to see this FRC deal, how big it would end up becoming over time. And I believe this is the best deal I've seen happen in the restaurant industry probably since Chipotle got full control and ownership, and McDonald's departed from them, because that was really brilliant for Chipotle to have that happen back in the day. But outside of that, this is the best deal I've seen in the restaurant category in the last 20 or 30 years, to be quite frank with you. They were already an investor in FRC Concepts. They acquired the rest for about a little over $300 million. And I think long term in the restaurant category, this deal will end up being looked at as very similar to when Facebook bought Instagram, when Google bought YouTube. It's just like, can you believe they only paid that for it? And they changed that company's business model forever. And I believe that's exactly what you're going to see play out over this next 5 to 10 years in regards to cake. People are going to look back and they're like, oh my gosh, they got North Italia, they got Flippin' Flapjack and Flower Child and Culinary Dropout and these other brands for that little money. Like, in those chains end up becoming massive things that changed the game for Cheesecake Factory overall, and maybe even became a bigger thing than their actual original brand. Like, I think if you look out 5-10 years from now, people are going to be like shocked by this. It was a game changer that changed the company forever. Now, the goalpost for cake overall is Darden Restaurants. Darden Restaurants is over a $20 billion market cap. This one owns Olive Garden, Longhorn Steakhouse, Yard House, and a few other smaller brands. And you look at cake today, it's under a $2 billion market cap. So this is a long-term goalpost that Cheesecake's really going after over these coming years. And so just that's something to kind of keep in mind there. Now, if I look at the most recent year-over-year numbers, revenue grew about $136 million for the company, but gross profit grew $128 million for the company. So the profitability is increasing rapidly for Cheesecake Factory now at this point in time. If you can have, of $136 million in new rev, 128 of that hit gross profit, you're doing good. You're doing really good. Operating income went from $83 million to $149 million. And then net income went from $43 million to $101 million. 2022 messed up Cheesecake Factory's profitability bad. Natural gas prices went insane, which hurt a lot of the margins in the kitchen from an energy standpoint. Then on top of that, the raw cost of everything that goes into Cheesecake's products went sky high. And then the last component is wages went substantially higher. So that screwed up cake bad in 2022. By the way, they still stayed very profitable even in a nightmare situation for them, to be quite frank. I mean, if you had to pick, would you take a recession or what happened in 22? You would honestly take a recession, because that was devastating to a company like cake. So 2023 was kind of get back on the right track. And then 2024 is kind of expansion out as, as you go into 2025 as well, right? Now, you look at the company, $101 million in net income last year, but it's way better than it seems. And the reason being is a company like Cheesecake Factory has a ton of restaurants, right? So they have a ton of depreciation and amortization. Now, if you look at cash from operations, for instance, $218 million in cash from operations in this latest year, right? This line item alone, depreciation and amortization, was $93.5 million. So that's the thing to kind of keep in mind with companies that have big physical locations, whether it be, let's say, like a Wynn Resorts, like a hotel chain. You can take massive depreciation and amortization. You own a ton of different restaurants, you could take a huge depreciation and amortization number, right? And so, that all plays in before you get to the net income. And so it makes your net income not ever look as impressive as it could be. The net incomes are, let's just call it like, they're an important number when you look at restaurant chains or hotel companies or things like that, but they're not the whole story. Look at cash from operations. That tells you more of the story when it comes to these sorts of companies, right? If you own, a SaaS business, depreciation and amortization is not nearly as big for you. But for a restaurant chain like cake, it's huge. So overall, I wouldn't be surprised at all, outside of a major recession in the next 12 to 36 months, wouldn't be surprised at all if cake doubles. And remember, it's a big dividend payer as well. So that's just kind of a little extra there. And It's been through everything. It's been through several recessions in its history. It's been through several high inflationary cycles and deflationary cycles. It's been through it all. So, and the worst case scenario, which was Rona, when their restaurants had to shut down for several months, and then when they finally opened again, they had to be limited. I mean, what a mess, right?